Alright guys, welcome back to the channel. This has been one of the worst quarters that the markets have seen since 2022, going all the way back to the bear markets. Now we've just seen a 5% drop for the S&P 500. NASDAQ continues to bleed, the Dow Jones continues to bleed, the top 50 in Europe have also come off their highs. Now, the only things that seem to be going up at the moment are commodities. We've got gold hitting new, fresh, all-time highs for a record 4 days in a row, and oil is also up 3%. So those commodities are really getting the push from the uncertainty of the markets. But we do have the Liberation Day coming up in about 24 hours. So let's dive into the charts, the analysis, the data that I've got for you today, looking at least from my perspective, when I think this bleeding is all going to come to an end and we can all get back into some sort of happy space. Hit the like, subscribe to the channel if you want to see some more happy spaces. It's your home of macro cycle analysis. I'll be covering the stock markets, the real estate cycle, Bitcoin, and of course, I've got ETH and Sol coming up later in the video for you. Quick shout out, today is the day that your free report comes out. The link is in the top of the video description, name, email address, and you'll get that in about 6 to 7 hours time. Okay, coming up this week are a few headline announcements. We've got the job openings, we've got manufacturing PMI. These are the high impact news announcements from the US, non-farm employment, unemployment claims, unemployment rate, so on and so forth. So there are some headlines coming up, but I don't think it's going to be that impactful across the markets. We're still waiting to see where the price ranges or whether the markets can break out of these trading ranges that we've been in since the last couple of weeks. Basically, are we going to start to see some certainty? Now, the only thing coming up that is big for the Aussies is the cash rate. Doesn't seem like there's going to be any sort of change here. If we do get a 0.25% drop, great. Maybe the home loans will become slightly cheaper, but we're still seeing home prices continue up. The winner's curse phase. I often get some comments about this asking, when are we going to see the winner's curse for cryptos? This is the US real estate and economic cycle. And in the US, they tend to call real estate home prices, housing prices. The actual value comes from the land, not from the house. So that might be a little bit confusing for some. The value comes from the land increasing and the house on that land essentially depreciates. So if you're in an area that people want the land, then you're going to see those land prices increase. More on that coming up. But essentially in this winner's curse phase, longer term, 2 years here, we continue to see prices increasing, which you might be asking, well, what the hell happened last quarter? Well, there are going to be times that you see the markets correct. And what I want to look at in today's video, even after these significant moves, this is the worst correction that the market has seen in over 3 years, going all the way back to 2022, where can we start to see a turnaround in the numbers? There was a big comment from a lot of people actually coming up for tomorrow asking, are we going to see the markets dump when Liberation Day hits? And for the last several weeks, days, the last 3 weeks, we've been looking at this being a potential reasonable area for a low in the market. Now, we're starting to see some significant volume come in on the way down, and the rally hasn't been met with that equal sort of volume to the upside, but things are slowing. So it hasn't confirmed yet that the low is in. We still have two key areas, 5,400 and 5,100 points for the S&P 500. And before we get too far ahead of ourselves with the bearish case, the low here at 5,500 still hasn't been taken out either. So when will these markets stop bleeding? It could be in the process right now because it's in a trading range. So the bleeding has essentially stopped since the week beginning March 10th for the stock markets. Same sort of thing for Bitcoin as well. As you can see on the short term here, you have the drop, the low on the 11th of March, and essentially the bleeding has stopped. But for the rest of the markets, you're still seeing lower prices on many of the altcoins. But I want something more concrete. I want some more certainty, even though that doesn't exist in the markets. I want to have a look at probabilities as to where the market needs to get to in order for the trend to change. Now, we have a swing top here that came out dead on the current 50%. 5,837, looking at the high number here, that's on the week, and the 50%, 5,838. So if you want to spare me a few, or a couple of ticks here, that is pretty good going to get us to the 50% level. Okay, so the low at the moment is 5,500, and it's had a reasonable bounce over the last day and a half as the new day has opened. The idea here is that we need to get back above 58.38. That's still the price, it's still the resistance level, and it also lines up with some of the swing lows before the market broke down. So we have the swing low in November, December, January, and then this very specific bar broke all of those lows on some of the highest volume that we had seen for many, many years. We have to go back to 2022 to get to that same sort of volume, and the banking crisis March low there. So basically an exact 2-year repeat, and then we had to go all the way back to 2.5 years to get similar sort of volume overall. So we could be in that stage, and again, these things take time. Can be annoying hearing about it very regularly, but that's what happens with the markets. If you want to hear about something flashy and fast and crazy every single day, that is what your portfolio is going to look like. If you want something steady, consistently growing, then that's essentially the data and the analysis, how that's presented to you. So it's really up to you as the individual investor. So the level above here, 58.40, 58.50 is essentially where the S&P 500 needs to get back above in order for the market to regain some of that certainty and those gains again. Okay, so what happens in the meantime? We have the European markets hitting a new all-time high this quarter and closing at the second highest quarter in history. So things are still on the up. We're still in this winner's curse phase with prices going up because we haven't seen anything on the contrary to suggest that the uptrend is broken. Now this is on the longer term scale. So we've got some closes here for the month. We obviously had the week close last week, the week ending, the month and the quarter this time around. So we've got some nice big numbers to have a look at. So the SX 53, the top 50 in Europe anyway, is at some pretty reasonable levels and it's still closed above those highs. For the monthly, had a reversal here on the month. One of the largest reverses it's seen, nearly 4%. Did 3.5 back in October and 3 back in April. So really not out of the ordinary where it is, and it's still above the previous highs there at 5,100. So Europe's still looking all right, even though Trump is coming out with all of his tariffs and so on tomorrow. And of course, the top 50 is made up of the UK. It's tested the highs, closed a little higher as well on that decline. You've got Germany having a pullback here, but look, it's done many, many months straight up for 2024 and 2025. And France has usually been the laggard here. It's hit a double top, so that one there would be something to pay attention to. Also, China has been very interesting of late, still underneath two significant 50% levels. However, it's not giving up yet. Keeps testing it, trying to break higher. So until we get that break higher, it's still in a slight uncertain territory, but it's still trading between the two ranges, 12,800 and 13,500. So it hasn't broken down, but it hasn't broken above. The bleeding has essentially stopped in many of these cases, and it's just waiting on the certainty to come back to the markets. And you can see from gold, the market in the short term at least is still feeling a little uncertain. However, like we saw with the S&P, that low seems to be forming there. As I pointed out in yesterday's video, I suspect that once the certainty comes back for the S&P 500, and like I've been talking about, sometime in Q2 is where I'm looking for that, and then we'll start to see some higher prices. Could happen earlier, but I'm giving it that time frame based on previous cycles that we've discussed on the channel. We would then see gold pause and then go through its own consolidation. So if that top happens to be here at 3170, $3,170, if that's the case, just as an example, then we might see a bit of a trading range form over the next several months while the US markets go up. And this is what I discussed in yesterday's video, looking back at 2006, big move up. That was from 540 to the peaks here at 730. Big correction, and then basically a churn for about 16 months until it was time for it to break out again. big correction, churn, and then runs into that final peak in 2011. So the point here is that we'll start to see a rotation out of these risk-off assets, these commodities that are, well, in the case of gold, not necessarily used that much, but in the case of oil, it's being used and we've had a bit of a push higher. But in terms of gold, risk-off, churning back into the risk-on assets, and that's when we'll start to see a bit more of the excitement come back into this winner's curse. It does take time. It's not going to be a straight up ride. I think many of you get that by now. And these can be reasonably good places to potentially add to your portfolio. Look at the extreme fear that's been going on now for, coming up to a month. We've got extreme fear. Let's have a look at the timeline here. Just over a month, actually. 3 months. December, you had to go back. We got fear, then into the extreme fear, tried to jump out into neutral, all the way back down into extreme fear. So it seems to be some sort of bottoming process, just as we've looked at with many of the other data points and other statistics that I've been presenting on the channel. So what does this mean for cryptocurrency? We're looking at fear, 34, yesterday 34, fear. Basically, it's still churning around between extreme fear and the odd day hitting neutral, but basically between the extreme fear and fear. And I'll show you that on the chart in just a second. The time frames are getting very close now that we're in April, at least here in Australia. And I've got a big video coming out for you guys real soon after this one. Big announcement. Okay, Google Trends. We're looking at the Google trend words, crypto, Bitcoin. At the moment, if this low persists, still a higher low compared to prior to the election. So good signs there. Yes, there's been lower highs, lower lows in the short term, and I mean short term going back to November, but the lows, there's still interest there throughout this entire bull market that continues to climb higher. To me, until the price chart breaks down, these are still signs that the market is consolidating for that next move up. I'm very much more focused on Bitcoin in this case. And as for Bitcoin, here we are. So this is the short term. I'll cover the fear and greed index with the timing here. So we're looking at that 4 to 5 months. We've now gone past the 4-month period. There it is there back in March 22nd-ish. The idea here is that we're looking at how long does the market sentiment take to reset until we're ready to pump up higher. Now, I know a lot of people like to look at maybe they look at the global liquidity. We can look at all these things, but market sentiment is a massive one for crypto. Sentiment is absolutely, you just have to follow it. Sentiment is the game here. Okay, so we're looking at 2024. The peak in sentiment came around these bars here when Bitcoin hit around 67K and then basically dumped for about 5 months straight into August. That's where these lows came in. That's the sentiment. Then it started to bumble around and we got the next move up. And the moves out of those areas start from that low, but it never feels like it in the earlier stages. If this is part of something like that, it's not going to feel like a bull market. It's not going to feel like this section here. That's just the nature of the game. A bull move, so we're looking at short-term stuff here. A bull market is born out of pessimism and a bear market is born out of optimism. Remember all the optimism in December and January? That started the decline here. Okay, so we are about 3 weeks away from this exact number, but of course we're not looking for exacts. The time frame is quite important here for me. I'm going to be watching April and May for the possibility of this base continuing to form, which leads me to the price action. So what does that look like in terms of price action? Well, I'll start with the short term and then build up from there. Short term, this is something that we can look at today, tomorrow, maybe even all the way to, say, Thursday. So 3 days there. And that level is 83,000. It's just above the 50% level of this range, that line right through the middle. And it would be above the swing low. So if the market can recover that, well, then the bulls in the short term are in control. Next, they've got to take over 85, which is above the 50% of this small down range here. And then it's got to take over the diagonal downtrend. So the diagonal downtrend will depend on which day that happens. If it happened today, it's got to close above 87,800. Happens tomorrow, it's got to close above 87,400. Thursday, you're looking at something like 87,000. So pretty much 83, 85, 87, then the tops come in at 89. So basically every $2,000, the market has something that is either holding it back, that it needs to break through, or it'll end up becoming resistance again, and then we come back and test those lower prices. So while it's still in this trading range between 76 and somewhere around 95, it's pretty much just noise. We're going to see tests, rejections, and the market trying to figure out whether we are going up for this next leg or if we're going to get rejected and come back down below the 70s. The major key level for this, bleeding to stop, the major level is going to be above 93 to 95. 93 is the diagonal and the 50%, the current 50% right there, and the 95 is the swing top that happened on Trump's announcement of the crypto strategic reserve. So that's where we've got these two numbers up here, and that diagonal is really, really important. You can see it spans all the way back from the previous bull market. That's what was holding up this market before we decisively sliced through it, one tweet, and then back down. So big key area, I think, coming up in quarter two, 2025. Now onto the long-term analysis. We're looking at the monthly charts and the quarterlies here as we've just got those closes in for BTC. This was the second red month and second down month, lower highs, lower lows. Now, of course, this has happened before in bull markets, but generally not this late in the game. Last time we saw it was May 2021 and June 2021. That still ran into another nice final peak. But as I pointed out in yesterday's video with a lot of analysis why, so if you want to see that, wait till the end of this video, there'll be a link there. You just go up here, click on that and watch that video. I'm looking at this being maybe something more like 2020. So looking back for a, one of these here, these bar patterns, looking at the fractal of 2020 because of what happened in December, January, February, March, and then into April having something green. December, red, green, red, red. And then you started to get out of the uncertainty that led into this final big run up. That's just looking at this period. It's not to say that we have this much time left, but just looking at some similarities in terms of how the market action was playing out. So if we're going to see a nice little green month here, that might be that first instance of a recovery. Now, if that was to happen and the prices were to remain within the price ranges of last month, then I would not expect the volume to be greater than March unless we had some sort of big news days and everyone got involved, pumped the price up and then pushed it back down. But in the whole picture for April, if that were to be the case, we're trading somewhere between 95 and 76 for the entire month. I wouldn't expect April's volume to be that much higher, but it could be a good sign that we are continuing to bottom. And over that period, like last time, it's taken 5 months. We're currently into our, we'll be into our third month here of the decline from January. In 2017, April was a green month as well, but it gave a lot more clarity. It basically broke out of the highs and put in the highest monthly close in history. Whereas in 2020, we just got out of COVID, and the close was still within the rest of the price ranges here, but it was showing a lot more clarity, even though there was still some time to digest the move. I mean, of course, it was COVID. Huge corrections happened in that month, but the big spring out of there was a good sign that we were going to see a massive recovery. So there is one green month with clarity, one green month still uncertain, but it was early on in deciding that clarity. So what does quarter two look like in terms of the percentages alone? Well, as we looked at recently, April, June, quarter two has the highest chance of it being green. That does not mean that it has to be green. It's still, 7 out of 10 times to have a green month there. And that leads me over to more on altcoins. When is this bleed going to end? Total crypto market cap excluding the top 10. I'm looking at a percentage here. It needs to get a monthly, we're on a quarterly, but let's get at least a monthly close above the 10% number. 10% provided this low doesn't get taken out any further. Now, as much as that is hopium, there's been no confirmation of a turnaround. If anything, there's been more confirmation that the market wants to go lower. Lower swing tops, lower swing bottoms. The trend is very much down on the macro scale here. You've got increased volume that got rejected. Check out that green volume there. This is the 3-month. Ran up, smashed back down. So if anything, there's probably more downside here, especially with the levels above. You've got the major 50% at 9.8%. You've got the diagonal down here coming into a massive price cluster with the diagonal up. There's just a lot that the market has to do has to overcome to get to that 10% either this quarter or next quarter, which would basically be the icing on the cake for the altcoin holders. Lots and lots has to happen. Remember, this is the total crypto market cap excluding the top 10. So all the stable coins, Bitcoin, ETH, XRP, etc. So let's have a look at the smaller caps here. Just to sprinkle the tiny bit of hopium back on the cake, it's still holding above 50%, but rather weakly here. It's still very weak underneath the diagonals and still underneath the resistance of the previous move in March and into that top in sort of March, April. So the only benefit here is that it's above the 50%. If this happens to continue breaking down, well, of course, we're going to see it on the others as well. This will probably show up first, and then you'll continue to see the weakness on the total crypto market cap. This is excluding Bitcoin, ETH, and the stable coins, but it includes the other top 10 altcoins. If I turn this one on, then it's going to adjust the chart accordingly. So we'll keep that off there just to have a look at the other large major altcoins. But yeah, still just holding above the 50%. The level I'll be watching out for is a breakdown of 540, then 500 billion. So breakdowns of 500 billion, not going to be great for the altcoins. When is that bleed going to end? Somewhere we could start to look at 650, ideally above 720 billion. Now, on top of that, the USDT dominance on a weekly chart here has tested the diagonal downtrend again. If this breaks out to the upside, a lot more bearishness, probably going to see a further dump for ETH, Bitcoin, the other major stables as well. That level above is at 5.9. The saving grace here is the volume continues to decline as the USDT dominance goes up. So you want to see that volume dropping off. There might be more interest later coming back to the altcoins. And why I say that later, just looking at some timeframes here, which was the same as 2021. We watched this play out from November 2024, looking at a very similar pattern, similar fractal. This was consolidating in 2021 before the massive dump happened in May. You got the bottom in June, high low in July. And obviously for the USDT, it was a lower high. So weakness began to show on the stable coins. Therefore, there was some more money flowing back out into Bitcoin and altcoins. In this case, we haven't seen a breakdown yet, but there is some slowing volume. In 2021, the volume continued to pick up into that dump. So there was more money going into there. And then it took some time, volume started to drop off, and then it rolled over. So we want to see the USDT dominance roll over for the bull market to continue on. Okay, so here we sit underneath the diagonal, underneath the 5.9, still short-term stuff. Take a quick look on the daily here. You can see on those daily bars, it's just not able to break through at the moment. So watching this one very, very closely for any sort of breakout above, that is going to push the prices of the altcoins way back down. 5.9% would be the next resistance level, potential area to slow the bleeding or stop it. And then if that's to break, I'm looking out towards the next 50%, which is also the previous tops, around the 6.5 to 6.6%. That would be catastrophic, I think, for altcoins. Could you imagine from here to here, that's about a 20% increase on the stablecoin USDT. So 20% more going into it and coming out of the market. That's not saying that the dominance is 20%. It means it's increasing its supply. If it had 100 billion, about another 20 billion going into it. Just looking at it here. Okay, on to Ethereum here, looking at the ETH BTC chart. 10 straight months down. It's done a new record here. So there's really not too many signs for the altcoins slowing down. There's a lot of fear out there. I get it. It's really just hasn't slowed down. And every time we think it's a bottom, it keeps going. And in this case, it's broken the previous low. December 2020, broken that, closed the month below it. Therefore, I got to keep going with the trend. The trend is still down. Doesn't mean that we can't get a bounce and then continue to bleed out. That's just not a great sign. There's really been no other volume come in. Whenever any volume comes in, it's basically been a bounce and then rejected straight away. That's happened on the monthly. It's happened on the weekly. It's happened on the daily. It just keeps getting slammed straight back down. So 10 months is a pretty long stretch in a row to keep dying off here. We've got to see some sort of bounce eventually, but I'm not going to be betting on that until it happens. I want to see some confirmation of this turning around. So if that keeps going, well, next levels I'm looking at are these swing lows, looking at around 1.7%, 1.6%. If that happens to break down, I'm looking a long way down. We'll cover those numbers later. It's no point getting too emotional about it right now. They're pretty far down. Okay, that's off the logarithmic, and you can see where that is to the downside. ETH USD rejected again as it attempted to test the previous support. That's at around $2,100. Last week, top was 2104. Slam back down, lowest weekly close since October 2023. Not a great sign here. No other volume coming back in. Next levels to the downside are around 15 to 1600. When will the damn bleed end? It needs to have some sort of support, and there's really no signs of long-term support yet. Same deal for Solana. It's had its lowest close, weekly close that is, in over 12 months. You're going to go back to this area here before the breakout in Feb, and also this top here in December 2023. That was pretty much the next highest weekly close. So really just over 12 months. Not great signs. It tested the lows again, tested the 50%, and that was last week, hitting 147. Continued down with the lowest close here. So not great signs. Doesn't mean it can't consolidate here and then continue down. If it does consolidate, the invalidation got to be a break above the swing top and the 50%. Got to be closes above 152. So let's throw in the old alert, 152. Closes and consolidations, that would be the invalidation to the downtrend for Solana. And while I'm here, let's look at XRP, which has continued to slide away. 208, holding up better than the other two, but still no confirmation that the bleed has slowed. At least we've got some tests a little higher up here, around 180. My next levels to watch if that 179, 180 breaks. I'm going to come back down here to about a 60% correction in the 140s. $40s, previous swing tops that happened in 2021. Because if this does break here around the 180s, that was the previous tops in April of 2021. So a bit of an easy ride down to those lows. And then we could start looking to that consolidation before the next move. And I think that would line up relatively well with the others market, the others chart dropping lower. The total cryptocurrency market cap potentially coming down. USDT dominance potentially going up for I don't want to say final time, but I'd love to say final time. And that could be lining up with the rest of these altcoins as well. So all in all, Bitcoin and the stock markets, well, let's start with the stock markets, don't look that bad at this point, even if they were to come down a little further, as we've discussed. Don't forget to check out your crypto and economic report coming out to you today. Now, the charts, of course, have continued down there. We haven't seen the signs to turn around yet, and I'll be looking at those levels as I discussed in today's video as to when I think the bleeding is going to stop, and we'll start to see a bit more of those boom times, at least for the altcoins. Stock markets not looking the worst here, and I think we're going to find out in Q2 where these markets want to go. The cycle, the real estate and economic cycle is still up, so I'm not getting macro bearish until we see major triggers that suggest the cycle is over. They haven't come. Let's keep going. Like, subscribe. I'll see you guys back here at the next video. Till then, take care, peace out, and massive announcement coming out later today. Cheers.